We are live here, filling in for Maggie Lake, talking markets with my man JD, editor of the Daily Dirtnap. How are you today, Jared Dillian?
What is up?
We are filling in for our dear friend Maggie, who's always there for us. We want to give a great report on what is going on in the markets today. JD, kick us off with what's top of mind for you today.
I mean, what's top of mind for everybody?
Yeah, let's just get it out of the way, and then we'll go over the esoteric market bullet points. Yeah.
Gold trading 42.10, going out on the highs, bid without.
Yeah. Like, what do we say about it?
It's gold miners breaking out again, another 3% up day in gold miners.
The higher they go, the larger the magnitude the rally is.
Newmont 140% from the lows.
Yeah. Bank of America coming out saying that gold miners are still cheap and they see $5,000 gold. I mean, this is the beginning.
Which is only a 25% move at this point.
Yeah, exactly.
25% move.
Totally reasonable to expect that as a result, just from the breakout of the 5-month consolidation around 3,300. Is that fair to say?
Yeah.
Totally fair to accept a price range like that. So that's what we're looking at. It's one of those trades right now where it is the most popular trade in the most popular sector, and it is getting a lot of attention, and it's still going. I
got to tell you, I've been in gold since 2005. I started buying GLD like in the 50 handle. Okay. And I've held on and added to this position and added to miners for the last 20 years. I've gotten it right. This trade scares the crap out of me. It's moved so fast. Like, I can't even enjoy it. I mean, yes, like I refresh the browser. I see how much money is in my account. I'm happy, but it's happened so fast.
Yeah.
Like, it's scary. It's actually scary to be long,
It's very difficult. If you have a big position in a security trading into all-time highs, basically everybody is looking around wondering what's going to happen next because nobody has any idea. We're not in a range trade. We don't have a moving average to bump against. We're through psychological levels. This is trading by auction in its purest form.
So I went to a gold dealer in Charleston, actually in Mount Pleasant, over the weekend. I just wanted to kick tires. I wanted to make sure the place had a front door. I wanted to make sure it was reputable. And, I came away from that conversation. I was like, I got like a couple of monster boxes of silver coins. Like, maybe I should take one of these monster boxes down there and put it on their counter and sell it, and get like 25, 30 grand and like pay off my mortgage, And then I think to myself, why would I do that? Like, that's not the goal. Wasn't the goal wasn't to make X. The goal was to make like 4X. Like, I always believed that silver could go to $200 an ounce, So, but it's tempting though. It's tempting to take a little profits. Like, I haven't taken any profits yet. So,
that's the important thing about knowing the purpose for why you're in the trade, for knowing the purpose for the money, for knowing the purpose for things that you have on, that helps you decide what to do with them. But I agree that it's treacherous in all-time highs. And I still have to say that, we're going to get rewarded for making some kind of a sale between 4 and 5K in gold at some point. That I just think you're going to get rewarded. You have to consider the RSI numbers don't lie. They don't go to infinity, and there's no magic carpet ride to wealth, and it's kind of, go ahead.
The other thing I want to say is I've been through this before. 2011, gold got up to 1,900 and it went up to 1,900 on a rope, and I sold none. And then it went down 45% to 1050 in 2013.
Yeah.
Like, I was eating shit for 45% because I was all bulled up on the highs. I'm like, no, I'm not selling. And so it's really one of the things I like to talk about is the decision when to buy something is very easy. You see a stock, you like a stock, you buy it. You just go buy it. I mean, maybe you get a little cute around the entry point, but you just buy the stock. The decision of when to sell something is infinitely harder, right?
Yeah.
because you have regret minimization, right? Like you don't want to sell something and then watch it go another 100% higher, like.
See, we have different views on this, JD. I don't chase perfection on my trades. And I feel like that is a pitfall that a lot of young traders happen to fall into. They have to have their full position at the lows and their full position at the highs. I'm much more transactional than that, and while I'll say that I've had reason to add to this gold trade, not subtract from it in the last month, I'm nervous about having done that, but I do believe that we've kind of broken through to the other side of this trade where gold holdings have flipped treasury holdings now, and that's not something that I would fade at all. And there's plenty of reason for this freight train to keep going. But like you said, we are down to where you are on this trade. Are you in it for the forever debasement of fiat currency trade? Or are you in it for there's nothing new under the sun, and when everybody gets in, that's when I'm going to get out trade?
Yeah.
Right?
I mean, I've never been a gold bug. Like I've always said, there will be a time to sell. There will be a time to sell. You just have to figure out when that is.
Yeah. Well, luckily, you and I have been spending, all of our waking hours trying to figure out where that point is. We kind of both agree we haven't gotten there yet. I'm trying to picture what that might look like. And like I was saying before we started this, gold is set up for us to come in the New York time zone to have a humongous gap into a new high. Like it feels like that's the next act in this play, is that you wake up and gold is, say, 43.50 bid, prices that we haven't seen at all in the New York time zone, and there's one-way traffic of profit taking, you know what I mean? And then God forbid that goes negative and becomes an outside day. We'll see what happens after that. But I want to going back to that idea of outside day. We've got a really interesting tell of what a bull market this is, and we got it this week, right? If you're following XME, the industrial miners, last Friday, we had a huge magnitude outside reversal day down, right? And as a trader looking for an inflection point, you're looking for things like that to say, okay, that's the end of the rally. It put this thing like 100, it put the stock up 100% in 6 months. It's like a ridiculous level away from its 200-day moving average, right? So you come in this week thinking that's going to be downside follow through from that outside day. We opened up Monday on last Friday's high, rallied from there, and then put in an outside reversal day to a new high. So these kinds of patterns are staggeringly bullish, and they're kind of signs to me that this bull market is nowhere near over.
Yeah, I mean, you have to think about things in terms of time as well as price.
Absolutely.
Right? Like XME was launched in 2007.
Yeah.
It's been around for 17 years. And it went sideways for 17 years. No gains, 0% return for 17 years. And then it breaks out in a couple of months, and you're telling me that it's over?
Right.
After breaking out of a 17-year sideways pattern?
Dude, by my calculations, it might rally for 17 years.
Yeah.
Because that's how I look at things, right? Gold was bottled up for 5 months. I'm going to try to expect to see it rally for 5 months from the day of the breakout. And we're only in month 1 or 2 right now. So, it's hard to conceive where things can go. But when you match them up against your timetable, sometimes you can come up with a target. The bottom line is that we haven't reached sort of max frothiness like we haven't felt since like the .com bubble, when you could walk into a bar and every conversation that you overheard was about who's buying what 4-letter stock in the NASDAQ and getting rich off of it. So we're not there yet in gold. And my guess is that we've got to get there at some point, but the rally is still sustainable. In the interest of not being a gold podcast, JD, I want to talk about some of the other stuff going on in the markets. We've got no data this week. Basically, we had Columbus Day on Monday. We got a holiday shortened week for the bond market. We get PPI tomorrow, which is expected plus 0.3% for September. Then we don't get CPI until the 24th next week. We get some housing data on Friday. So we're kind of looking for cues for the bond market here, which is sitting kind of at its highs for the move with US 10-year yields around 4%. You and I have been saying for months, don't fade Trump on the idea of getting rates much lower. Paul Tudor Jones comes out the other day on CNBC and says, I think he's going to get 10-year yields down to 2.5%, or Fed funds down to 2.5%. So that very much confirms what we've been talking about. What do you think about the rates and dollar market right now, JD?
Yeah, I mean, if you look at, I spend a lot of time looking at twos, because twos follow Fed funds. Like twos are all about Fed funds expectations. Pull up a chart of 2-year yields.
Yeah,
it's a downtrend.
Yeah,
it's a downtrend.
Clean as could be.
And I'm kind of mad at myself for not figuring this out earlier. Like, I tend to pride myself at like being early on the rates moves, but yeah, I mean, if we got PPI and CPI, if they come in soft, you could see 10, 20 basis points to the downside in twos.
Right.
And
You're
the other
right.
thing I want to talk about with twos especially, but with rates in general, there's a lot of asymmetry here, right?
How do you mean?
Rates can go down a lot, but they can't go up a lot, right? The Fed is in a cutting mode, right? So really, there's a debate about whether they're going to cut 1 time this year or 2 times this year, but they're cutting. They're cutting, right? Like, the debate isn't about, oh, they're going to hike rates. That is not in the cards, right? So rates are either going to be unch or slightly higher, or they're going to be down a lot on soft data. And when we get all this economic data, like after the government reopens and all this data gets released, I'm pretty confident that it's all going to be pretty soft.
Yeah.
The economy's been weakening, and I think that's what we're going to find out. So
$58 crude oil, JD. Where's the inflation going to come from right now? And the coolest part is that we've got this dynamic where we've got energy prices imploding while we've got metals prices soaring at high prices. So this is like sweet spot for miners. Obviously, they're doing that. But I'm just saying that those are the tailwinds that make this a sustainable bull market. And I'm not talking about for days. I'm talking about over the course of years, right? It's not with the oil price is in no danger of spiking to $105 gas anytime soon.
Dude, so, I think oil's got a date with 55 coming up.
Absolutely, man. This to me was something that Trump arranged with the Saudis when he was over there having those big keg party celebrations that they were having. He let them invest $600 billion in the U.S. and he said, in return, we're going to let crude oil fall to $50. Is that clear? and that I think is what's going on. So let's talk about stocks for a minute, JD. The S&P has been kind of flat around 6,700 the last couple of days. The rotation, though, has been obvious. This morning, really interesting. Morgan Stanley earnings come out. Financials and broker-dealers have been sideways. Morgan Stanley earnings come out. They come out with $18 billion for the quarter in earnings versus $16.6 billion expectations. Their wealth management division generated $8.2 billion. Their stock trading revenues were up 35% to $4 billion in Q3. How much investment in gold do you think is passing through the Morgan Stanley Wealth Asset Management desk? Right? I mean, that's what it screams to me. What do you think?
I think this is probably going to be the best year for Wall Street bonuses in some time and going forward. I think this is the peak year for bonuses.
Man, it's pretty wild. The year that Scott Bessent said, Wall Street's been, doing so well for so long. This is Main Street's turn, right? Main Street doesn't seem to get a turn too often. But anyway, let's watch that dynamic. We've got 2 Sigma and 3 Sigma rallies in Morgan Stanley, Bank of America today. Morgan Stanley
Wells Fargo yesterday.
Yeah, Wells Fargo
was up 7%.
Yeah, they're hairy, and that's borderline a criminal institution, Wells Fargo. But I don't want to go into that. The rotation has been very interesting. Today, we've got a 2 Sigma rally in biotech. I don't know a lot about biotech. I know that those sectors tend to rally with low rates, right? It's just one of those things. 2 Sigma rally in solar stocks. TAN is looking like an unbelievable breakout juggernaut, a big 5% rally today. This trade is happening because Joe Sixpack is going to put solar panels on his roof because the electricity bill's going through the roof because of the AI data centers. So don't fade solar here. Gold miners, another 2 Sigma rally to a new all-time high. Oil prices in the tank. Gold bid the highs. I mean, This thing is on a rope to somewhere where we haven't gotten yet. Yeah, exactly. Silver miners, throw that on the pile. SIL, a 2 Sigma rally, new all-time high for the move. We've got big percentage gains in pot stocks up 3%. I mean, pick a Trump trade and get in it, right? I don't care which one you pick. The president took office and he set up nine brilliant trades right in your face with nothing but tailwinds. And there are people complaining that they think the stock market's going to curl over and shit the bed. I don't get that kind of thinking at all.
I will say the price action today was pretty interesting. I mean, stocks came apart like a soup sandwich in the middle of the day, and it was looking pretty ugly for a second. You're getting some pretty big intraday moves over the last couple days. You know?
What it is to me, JD, no matter what, you look at the days, the market's up, down, or sideways, and the strongest stocks, gold miners, uranium miners, industrial miners. It doesn't matter. If the stock market's up, they're up a couple of percent. The stock market's down, they're up a couple of basis points. It's a dynamic that I haven't been able to take my eyes off of, because no matter what, these sectors are in runaway rallies right now that have not found their peaks. And let's just remember that, bull market rallies can stay in motion longer than the bears can stay solvent. So if you're long them, you use the trailing stop and you don't get out until they curl over. That's the best strategy that I can come up with. I
like what you said earlier about not having to be perfect in your trading, not having to buy the absolute lows, not having to buy the absolute highs, not having your full position size the whole time. I'm a big fan of like averaging out of stuff.
Yeah.
You know what I mean?
Yeah.
Like sell 10%, wait a couple weeks, sell another 10%, wait a couple weeks, sell another 10%, average out of the position. Like if you're waiting for X marks the spot to just dump the whole thing, you're probably going to screw it up.
Totally. This is so important for traders to get their heads around. Last Friday, for example, was a great example. We have that outside day in a couple of different sectors. We've got heavy stocks on Friday. It was one of the bigger down days that we've had in a while. And I've got a lot of risk on and some really big positions on. And my buddy calls me up. He's like, "Hey, man, what are you doing in the markets today?" And I was like, "Selling." I'm selling. I mean, this stuff, there's huge magnitude losses in the stuff that I'm long from the highs. I don't really want to ride it all the way down to whatever, you know what I mean? So I'm participating, make the position smaller, take some profits. And you've said this before, JD, the best thing that it does, frees up the noggin a little bit.
Yeah.
Takes a little pressure off, right?
Yeah.
You can't trade in a pressure cooker 24/7. You know what I mean? You got to figure out when to let some pressure out. You got to figure out when to take a rest on this position. And this is very much for me a floor mentality. I don't mind participating because I like to sell something and see what the market does to that sale, right? Just take a note, put a sale out of 10%. Did the market steamroll me and run me over? Or was that a brilliant sale? And maybe I want to make more of them.
You know who used to do that was Soros.
What did he do?
Soros used to do that. If he had $1 billion of bonds to sell, he would take 10 million of bonds and sell 10 million. And if the market gobbled it up, he would just wait, right? But if he sold 10 million of bonds and it fell apart, he'd say, "Screw it, I'm dumping the whole thing."
Dude, I tell you, all right, so here's a trade secret. This can come out of something that I learned at Goldman Sachs, following probably the best gold trader in the world. He would be sitting there in the middle of the day, call it with a humongous long position. It would be sending to go against him at some point during the day, and then it would stop. And instead of kind of curling up into a ball and saying, "This thing has gone against me," he would go out and play some offense and say, "Let's go buy some gold from people and see how they deal with it. See how they feel if they want to be short down here in this hole." Right. And sometimes, he would just go around the broker dealer market and pay a couple of offers. And next thing you know, you create the flywheel and people are like, "Oh shit, I don't want to be short in this hole." And you kind of learn something. Right. So it teaches you what some of the other positions are in the market when you're dealing with a small market like the precious metals market. I don't know if you're going to go at it in the same way dealing with the stock market, but I do believe in participation. You're long a lot of stuff. The market's down huge. the old TG would have been sitting there with his arms folded saying, I'm not selling anything. These are dumb sellers. And the new TG who makes more money than the old TG would be in there saying, I'm going to lighten up. I'm going to get smaller in that position because they're whacking the piss out of it from the highs. Nothing wrong with that kind of trading. JD, topically, what else could we talk about in the markets? Is there anything we left out?
We haven't talked about the dollar. Dollar last couple of weeks has moved up. DXY has moved up a couple of handles. Last two sessions, it's been a little bit weaker. I'm bullish at the moment.
What kind of bullish for what kind of move? For how much?
Just to 100 in the DXY. Yeah. Okay. There's some resistance there. So
yeah, that's kind of like the old range bottom. The last time we had that spike, I guess, was in this last spike we just had to the 100-day moving average at the end of July, peaked out right at about 100 and change. So that looks like a good level there. What's amazing is that gold and silver are rallying to new all-time highs while gold claws its way from 97 to 99 in the dollar index.
Yeah.
Right. That's a sign of relative strength, really important to focus on and not miss. It tells you that the metals rally is alive and kicking no matter which way the dollar is going. And it kind of tells me that if we have, God forbid the dollar turns and dumps, if you're wrong, there's going to be another flare up in metals that take it even higher. So we'll see how the market deals with that dynamic. But we've got two virile bull markets here kind of sailing away, looking pretty good all the way around. The NASDAQ and the S&P are both, NASDAQ testing 25K again, the S&P at 6720. I mean, it's hard to make a bear case right now, even after Friday's de-risking. So it feels like all systems are go from here.
Well, we got two virile traders to talk about it.
Yeah, that's for sure, man. That's why we're here. Are there any questions that we need to bring on from the side of the audience here? Let's see here. I don't see any questions directly.
I don't see any questions.
No, I don't think so. What else can we talk about? PE, private equity, JD. Give me some blurbs on that. You've been bearish for quite a while, and now the charts are curling over. What do you think?
Yeah, Jamie Dimon had some comments about private credit today. He called them like turds or rats or something. Like I can't remember. Like,
yeah, there's an issue somewhere in private credit. Or somewhere in private credit. It seems. Is that fair to say? I mean, the Bloomberg levered. What is it? The BlackRock levered loan.
Yes, the secured loan fund.
Secured loan fund.
Yes.
That thing is taking a dirt nap.
Yeah, I mean, credit is pretty weak here. I mean, but this First Brands bankruptcy, first they're like, oh, nothing to see here. It's like a $5 billion bankruptcy. And then they started to peel back the onion. They're like, oh, this is actually like a $20 to a $50 billion bankruptcy. Yeah. I mean, there was like credit on top of credit on top of credit. And dude, the private credit market is bigger than the high yield bond market. I don't know if you knew that, but private credit is bigger than high yield at this point. And it's done some interesting things like high yield. One of the reasons it's done so well is it's actually higher quality than it used to be. It's mostly BB rated stuff, but private credit is where all the garbage is, the stuff that's yielding like 10 to 12%. And dude, if this comes apart, oh my God, it's going to be ugly. Yeah. So credit leads equities, and HYG has been selling off the last couple weeks. And before you got that downtick in stocks. Mm-hmm. So
yeah, totally fair. That is the way it always happens. You always have the bond guys, shouting at you, saying that there's something coming apart over here, and how is the stock market not picking it up? And there's always a delayed reaction. There always is. So we'll be on the lookout for that.
We got to talk about Bitcoin. We're getting some questions about Bitcoin.
Yeah, exactly. So what happened in Bitcoin? We you and I have been saying you got to watch how it reacts at certain prices. The last time Bitcoin got up to 125K, it got swatted almost in a straight line. That little flash crash that we had last Friday down to 107 has since bounced to around 110, 111K. What are your thoughts on that right now?
I mean, you and I are in complete agreement. Like, technically, that is awful. Mm-hmm. That is absolutely awful. And it's funny because the Bitcoin guys for years ripped on the gold bugs, put up those memes about Bitcoin and gold and stuff like that. Like Bitcoin is up like 500% and gold is up like 2%. They were putting up those memes. So now, how do you feel? How does that feel? How does that feel?
Wipe the laser eyes right out of your goddamn avatar so fast your head will spin. Right? It's just something that you can laugh at after all these years, man. It's just you got to have humility in trading.
Yeah.
Right. And if your trade is going and someone else's isn't going, the best thing to do is shut up. Right. It really is. It really is. At all times, the best thing to do is to shut up. I mean, dude, you and I
the market has karma. It does.
Yeah, there's huge karma.
Karma has everybody's address.
It's got a memory. The market's got everything, man. The market to me is a god that you do not mess with, like Mother Nature kind of thing. It really is. And it's not until you respect the market like that till you can that you can figure it out, quite honestly. Because if you think you're going to walk in and go toe to toe with something, you're absolutely dead wrong. Because you'll get carried out every time. What is one of the other dynamics? What do you think about semis and Nvidia? Where are we on that AI trade at the moment, JD? We're seeing that circular financing going on. The gig is up. Everybody knows that there's this circular financing at the highs to keep the flywheel going. And then there goes Nvidia flying off to almost $200 a share this week. What are we doing in semiconductors?
Dude, Nvidia is a couple percent away from being a 5 trillion market cap. Think about that.
We have a little country floating around in our stock market.
Yeah,
is the way I look at it. We really do. You know what I mean? With their market cap bigger than Germany's GDP now, it's gotten quite absurd. It's pretty amazing to me that the entire market cap of gold is around $27-28 trillion. And the market cap of Nvidia is almost $5 trillion. Like, that is completely insane to me. It probably is telling us that Nvidia is not going to sustain this kind of market cap, because I feel like one of the messages, or at least one of the battles alongside the massive battle between good and evil that's taking place, the battle sort of between... Oh, I just lost my train of thought. Which battle are we talking about? Oh, sorry. Paper assets and hard assets, right? We've got the gold market bid all-time highs, while in the background, Velocity is putting out 5x levered ETFs on tech stocks. Like, to me, that is like, those two things are just glaring against each other. One of them is dead wrong, and I know it's the 5x levered ETFs.
Did you know that if you have a 5x leveraged ETF, if the stock goes down 20%, it goes to zero?
You're zeroed out, right? Yeah, exactly.
It goes to zero.
So I can't even imagine that. I trade Nvidia like a drunken sailor sometimes, mostly for the rush, because my muscle memory comes back from the .com era, and I get myself in situations that are completely hairy, trading with no leverage at all. I can't even imagine the visceral feeling of putting on a one lot in a 5 times levered Nvidia ETF.
And dude, you can do that with Reg T margin. You can get it 10 times.
Like, seriously, like, what in God's name? You know what I mean? So, like, my point is, gold is 42.10 bid the high and last sale, because we think we're going to get away with pushing 5x levered ETFs around the markets. Yeah. You know what I mean? Like, there's some kind of a correlation there that's saying this gigantic paper market that you guys have constructed with over the day options and, double and triple levered ETFs and the short levered ETFs, this and that, it's just paper money getting sloshed around. And right now the world is choosing hard money again. So I think that's the trade that you got to focus on, and stay away from the 5x Nvidia ETFs if you can.
Yeah.
Well, I think that kind of brings things full circle. Let me see this here. All right, we got one question, JD. Can I ask you your thoughts on emerging markets like Brazil right now? Do you guys have any value trades there?
Super bullish. First of all, Med Faber tweeted yesterday or the day before. Guess what? Global, like international value stocks have outperformed the S&P over the last 1, 3, and 5 years.
Wow.
Not US value, but international value, right?
Interesting.
And that includes emerging markets. Super. I mean, no comments about Brazil specifically, but EM in general, like this is the time. So,
there's value there.
Yeah.
That makes sense. That's definitely not my kind of trade. I won't be able to get into that trade until, the emerging markets start proving that that's the place to be, but that can be your trade if that's your kind of value pick and things like that. Absolutely. Let me just see if we got any other good questions here coming in that we need to answer. Covered that. No, I think we got all the way around the horn, man.
All right.
I think we did a good job covering for Maggie today. I think she usually goes about a half hour. That's pretty much where we went. Hopefully Maggie is watching this and we made her proud. Jared and I are huge fans. She's a huge asset to both of our businesses, and we're grateful for that. So we're going to say thank you for watching. We hope we covered the markets well to your liking and covered everything that you wanted to hear about. And if we get a chance, we will be happy to cover for Maggie anytime in the future. Isn't that right, JD?
Absolutely.
She's the absolute best. Thank you for listening and tuning into Talking Markets with Maggie Lake without Maggie Lake today.